series is for CAIIB December 2022 exams, and all the important objective questions are covered under it. So attend this series from start. All the videos are available on YouTube, on Officers Adda YouTube channel. So firstly, I would always suggest to just subscribe to this channel, as well as click on that bell icon. So every day whenever you get a new video, you will get it immediately. Okay. Also, download this Officers Adda or download this Adda 24/7 app on your mobile. In this app, you'll get study material, live video lectures, classes, tests, you name it for CAIIB and JAIIB, and you'll have it. So you definitely go for it. Let's move on for the series. Also, yeah, important point. See this, we are having this 80% off going on now on all the paid products. So use this code Y432 and use this, grab this 80% off opportunity. Okay, don't waste this, because remember, 80% is not a joke. Out of 100, you have to pay only 20 rupees today. Okay. Okay. So because why am I telling this? This is a batch which is running right now in for December 2022 series. Here ABM, BFM and retail, we are covering all the three English batch. Okay, so join this. Timings are also suitable as per your banks, 8 p.m. to 10 p.m. Even if you miss out something, you can have the recorded videos. Okay, so this 78% is off now. That is now 80%. You can use this code. Okay, 80% means such a use, 2% more, isn't it? Let's move on with the series. MCQ series module A. Okay, this is here, we are in module A. This, why the number is 46, because earlier we have covered it up till yesterday. Okay, so watch, that's why I'm saying watch this series from the start. Don't check out something in between. Okay, always remember, knowledge is useful when you do it with the dedication, with the discipline. Okay. Okay, let's start. Which one is not an exception to law of demand? Now what is this? Which one is not an exception? Firstly, what is law of demand? See here, law of demand is this. This is the law of demand, right? Quantity, and this is price. Means what? As the price goes on decreasing, the quantity demanded goes on increasing, isn't it? That's the law of demand. So what do we need? Not an exception. So what is an exception? So exception will be this. What will be the exception? See, this is the law exception to this, or this is the exception to this. Means this line won't go this way, it would go either upwards or flat, right? So these two are exceptions. So which are the exceptions and which are not? Let's see that. First, Veblen goods, Giffen's goods, normal goods and articles of distinction. Okay. Now before answering this, firstly I would suggest you to answer. Which one amongst you do you think is a correct answer? Answer it in the comment section fast. Has everyone subscribed to the channel? Has everyone clicked on the like button to the video? First remember that and do it. Okay. Okay, so which are the answer? What is the correct? What are these Veblen goods? What are these Giffen's goods? Anyone knows? Okay, I'll give you just gist. Okay, Giffen's goods mean these are the necessities. Necessities. Okay, mean these are low cost items, always necessities. And what are Veblen's? High cost articles, means I would say luxury items, I would call luxury. Okay, luxury. Okay, so these are Veblen and these are Giffen's. So these are always an exception to law of demand. Why? Because necessities. Here, if the price tomorrow of the petrol increases drastically, okay, so do you consume less or do you drive less? Don't you go to office? You go to office, isn't it? The here the necessities won't change even if the price rises. Okay, what's happening in Sri Lanka, right? Same problem. Giffen's goods, luxury goods also same. Whenever you have, suppose if you have a painting of some famous painter, as the price goes up, the demand also goes up, right? So these are all Veblen goods. Normal goods, yeah, normal goods is okay, not an exception. We want not an exception. So who follows the law of demand? Correct. My answer is C. Okay, and articles of distinction same as Veblen. Okay, these are same as Veblen goods. Okay. Demand for a commodity is elastic when it has, means what? When is the demand for a commodity elastic? Elastic means what? As the price changes, means here, what is elasticity of demand? DQ means percentage DQ. Okay, percentage Q we'll call it, okay, for simplicity, upon percentage P. That is elasticity of demand. Okay, means we call it, actually we call it DQ upon Q and DP upon P. Okay, that's what we call it. change in price quantity demanded upon original quantity, of course into 100, but goes up because numerator and denominator 100. Upon change in price upon P, it should be, not Q. Okay, so dP upon P. Okay, so this is the formula for elasticity of demand. So what demand for commodity is elastic when it has, which goods will have elastic demand? Only one use or many use? Forget this C and D, uses which can be postponed, uses which are very essential to the consumer. Essential, here, the goods which are essential are not elastic at all. These are inelastic. Why? Petrol, even if the price rises, will the quantity demanded get lesser? No, right? So this is out, this is out. Which one amongst A and B? Correct. Type fast A and B. In the comment section, I want the answers. Okay. Comment section fast, fast, fast. A or B, A or B. Correct. It has B, right? Because if any commodity has only single use, so it's not at all elastic. People will shift that use to something else. Okay. Which of the following pairs of commodities is an example of substitute? See here, this is all module A economics. Okay. Module A economics in ABM. So very important questions. Okay. Which are the examples of substitutes? Okay, we want substitutes. Okay, coffee and milk. So are these substitutes? Means, is milk a substitute to coffee? No. Why? Because milk is put into coffee. Okay, these are all supplementary goods. Okay, next is, okay, I'll write here, supplementary or complementary, some books call it. Supplementary, complementary, one word, means one is dependent on other. Okay, supplementary. Okay, now mustard oil and coconut oil, diamond and cow. Is there any relationship between diamond and cow? If the price of diamond goes up, something happens to the cow. So over. Pen and ink, are these supplementary or complementary or what? Substitute? Which one? Pen and ink. Ink is put into the pen. So these are all supplementary again. Okay, supplementary. I'll just write it over here now. Supplementary. Okay. But what about this? Mustard oil and coconut oil. These can be the substitutes. If instead of using mustard oil, I can use coconut oil and vice versa also. Okay. So this is the answer B. Okay, 48. Next, for most customers, this is very important questions. A question: apples and oranges are substitute goods. Or substitute means what? If the price of the apples rises, I can eat oranges. Okay. Therefore, we would expect a rise in price of apples to lead to, means if the price of the apple leads to, now we are only comparing about apples and oranges. Okay. So if the price of the apple increases, then what should happen to the oranges? Think. A, B, C or D. A rightward shift in the supply curve of the oranges, a leftward shift in the supply curve of the oranges, fall in prices of the oranges, upward change in the demand curve for the oranges. Which one? A, B, C, D. Fast. Simple answer. Okay. Fast. In the comment section, I'm seeing. Okay. Which one? Correct. Leftward? No. Somebody has clicked leftward. Don't answer anyhow. Think and then answer. Okay. Answer is D. Upward change. Why? See here, it's very simple. Apple and oranges. There are only two products. Okay. And oranges. Okay. Substitutes. Now what happens? Price of the apple goes up. So what will people shift to? People will run to oranges. Now what happens in oranges? This is also limited stock. So what happens to oranges? Apple's price rises, people shift to oranges, so more demand increases, right? Increases for oranges. Now demand increases means what? Upward change in the demand curve. That's what is the meaning, right? Next, a change in climate conditions resulting in hot weather, price remaining the same, would cause a consumer of cold drinks to move to a lower curve, to move lower down to demand curve, move to a higher demand curve, move on the same demand curve. So what will happen? Suppose if it gets too hot, what happens in summer? The quantity for cold drinks increases or decreases? So correct answer is simple, isn't it? Move to a higher demand curve. So people will demand higher, isn't it? When an individual's income falls, everything else remaining the same, his demand for inferior goods. What happens to inferior goods? Okay, imagine this case. Income falls means what? If your salary today is, let's say, 50,000, tomorrow it goes down to 30,000. Okay, what will you try to do? Will you, and okay, I'll give you one more example in this. Salary is 50,000. You are planning to buy what? New Android phone or Apple phone. Okay, you are planning to buy that 50,000 salary and planning to buy Android phone, Apple phone, very high costly. What happens? And cost of that phone is, let's say, what? Let's keep it average 40,000. Okay, I don't know if something is available at 40,000 for Apple. Okay, but then also let's consider it as 40,000. Now what happens? Your income comes down from 50,000 to, let's say, 25,000. You change the company, your company has some problem, bank has some problem, does anything happens. Then what happens? Your income falls. Now will you buy that same Android phone of 40,000, or will you try to buy a phone which is of cheaper rate? So what has happened? Inferior goods. So demand for inferior goods will happen what? Increase, remain unchanged, we cannot say, or decrease. Which one? Type fast. A, B, C, D. Simple one, isn't it? So this is increase, right? Demand for inferior goods. What are inferior goods here? Inferior goods are secondary goods, or second hand goods also you can call it. Okay, and there is a huge market for this inferior goods. Whatever we throw away to all those kachra walas and those bangar walas, okay, this kabadi walas, so there is a huge market for, there are buyers for that also, huge. Okay, these are called as inferior goods. Okay, so as the income level falls, the quantity demanded for inferior goods increases. Okay, a fall in price of a commodity whose demand curve is rectangular hyperbola causes total expenditure on the commodity too. Now what is this rectangular hyperbola? We know one thing about demand curve. What? This is demand curve, right? We know quantity demanded and this is price, right? As the price goes on decreasing, the quantity demanded goes on increasing. We know that, this much we know. Now what is this hyperbola? Okay, hyperbola is something where, I'll tell you one simple example. See this. Hyperbola is such, it's a curve, here it's a geometrical part. Okay, those who have studied science will understand this. Parabola, hyperbola, okay, all these things. So hyperbola means what? Here it's a circular, similar to circular, I won't say circular, it's a circular curve, and the important part over here is all the points on this hyperbola have the same area. This is something different. See this, I'll mark it over here. This is, let's say, 6 and this is 2. Okay, now what happens over here? 6 to the 12, area is what? 12. Okay, this area is 12, I write it over here. Now let's say over here, this is 3 and this is 4. See this, area is 12. Okay, now here what happens? This becomes 4 and this becomes then 3, right? So area is 12, right? 3, 4 and this is 6. So what is the important part over here? The important part on hyperbolical curve is the areas under this curve are always same. So that's why I said it's more of a mathematical part. So just for you to understand as a banker, remember the overall this expenditure does not change. It remains the same. Means what? 6 earlier when the quantity demanded was, let's say this, and this is the price. When the price was rupees 6, quantity demanded was rupees 2. When the price was rupees 4, quantity demanded was rupees 3, right? And when it is 3, the quantity demanded is 4. So what is happening? The overall consumption does not change. Okay, so this remains unchanged. Correct answer is this. Okay, okay, next. The relationship between demand for a commodity and the prices. This is simple demand curve, isn't it? Demand for a commodity, quantity and price. Okay, so demand for a commodity and a price. Ceteris paribus means what? All things remaining same, means all other things remaining same. Other, I'll write it over here. Other things same, just I'll write it. Okay, what are these other things? Other things means income of the person, cost of the substitutes, okay, inflation, all these other things remain same. So that's the meaning of other things, okay. So what does it say? Price and quantity. So demand for commodity and price are negative, positive, non-negative, non-positive. Which is the correct answer? Simple one. Which one? Negative, right? See this negative. As the price is falling, price comes down, quantity goes up. See this, quantity was over here, now it's here. So quantity is moving on the right side, isn't it? Other things remaining equal, a decrease in quantity supplied to the market at the given prices leads to, now this is a difficult question. And remember, this might come to you in CAIIB because it's really difficult. I'll tell you the answer. See this. I'll show you the answer. Answer is simple one. Which one? Which one do you think? A, B, C, or D? Think first. First you type the answer. In the meanwhile, I'll show you explain you the answer. See, this is a law of supply. See this, quantity, and this is what, this is price, okay. This is supply curve, right? And let's say this is demand curve, okay. This is demand curve. I'll draw it straight, okay. Demand curve. So where is the equilibrium? This is the equilibrium. What is the equilibrium? Equilibrium is the price at which the buyers and the sellers agree to do the business, isn't it? So now what happens? See, this is the supply curve. Supply curve always moves upwards. Demand curve always moves downwards. So what is happening now? What is the question? The question is quantity, decrease in the quantity supplied. So quantity supplied decreases. So see here, earlier the supply was on this line. Now what has happened? The supply is decreased over here. So what will happen? Even this demand curve will shift downwards because supply is reduced, right? As the supply is reduced and everything else is same. So this demand curve, people will also move to this. This is known as shift in the demand curve, okay? So people will shift the demand curve. As the demand curve shifts, what is happening? See here, quantity demanded was Q over here, Q1 I will call it. Now it is Q2. So Q2 is less than Q1. So contraction in demand. And what about the prices? Prices, see this. Earlier price was this, P1, okay? P1. Now the price is what? P2, right? P2. This is 1. So what is this again? P2 is less than P1. So lower price. Correct? So the answer is D, lower price and contraction in demand. See this, demand contraction is happening, price lowering is happening, okay? Law of demand explains, okay, this is simple. Law of demand means just now we saw it. See this law of demand, this sloping downwards, price and quantity, okay? So law of demand explains quantitative relationship between price and demand, qualitative relationship between price and demand, relationship between demand and supply, rate of change of price and demand. Is it, what is the correct answer? Okay, okay, simple one. Type fast. I know where are you getting confused. Many of you might be getting confused between A and B. Okay, so C and D is out. Here C is out because it does not talk about demand and supply. It talks only about price and quantity. So C is out. Rate of change of price. Does it talk about rate of change? No, that is elasticity, right? And that is also price and demand. That is totally different. So that is out again. Okay. Now quantitative and qualitative. What is this? Quantitative means numbers. Qualitative means the quality. We are not concerned here. Economics, at least the law of demand, is not concerned with the qualitative part. It's concerned with only quantitative part. Okay. So correct answer is A. Okay. So these were the questions, and now I'll come to this batch which is coming up, which is started already. ABM, BFM retail. BFM is yet to start, so join this as fast as possible. Okay, I'll show you how to join this here. Why am I cancelling this 78%? Because I'll show you how to get this 80% off. Okay, one sec. I'll show you. Let's go to Adda 24/7 directly. Okay, let's go to Adda 24/7 over here live. I'll show you how to get the discounts. Where is it? Yeah, over here. See this. Adda, go to Adda 24/7. If you are having the app, then it's the best. Okay, on the app you'll get not only 80, but you'll get 1% extra, 81%, because you have some certain coins over there. Okay, so coins will give you 1% extra. Okay, on the website, click on JAIIB CAIIB. Once you click on JAIIB CAIIB, see this. You have two packages. One is this Mahapack, and second is this English batch. Okay, both the things are available to you. Mahapack is, what is Mahapack? Mahapack is like the Netflix or OTT subscription which you take. On this OTT subscription, when you take a subscription for let's say 1 year, so whatever comes on that subscription for 1 year is available to you. Any program, any series is available to you, right? So that is basically this Mahapack. All the batches, bilingual, see this bilingual batch, English batch, some fast batch will come up after this, case study batch will come up. All these batches are available on this Mahapack. You take one subscription and everything, and here also discounts are available. I'll show you. See this discounts, okay? See this discounts are available. See this fees is 45,449 for all these batches together. And that also, now look at the discount part. See this discount part, I'll just make this. See, firstly you read everything over here. All the points are given. See this 4 plus batches for ABM, 3 plus batches for BFM, retail, 500 plus case studies, okay? Recorded videos available, everything you can go, you can read it, okay? Now second point about the fees. See this 45,449. Click on view offers. Once you click on view offers, what happens? See this. What was the code? Y432. Okay, apply. Now see the fees. 45,449 reduced to 9089. Okay, so 45,449 to 9089. 9089 means what? Roughly, if you are a new joiner, you will get 1000 increment. If you have covered 3 to 4 years in the banking, you will get roughly 1200 to 1300 increment, right? So even if you are a fresher, then also within 9 months you will recover everything. And if you are a seasoned banker, 3 to 4 years, then within 6 to 7 months only you recover everything. Okay, this is for Mahapack. Similarly, you can go for this batch also. Okay, English batch. If you don't want Mahapack, if you want only English batch, so that is also available on English batch. Just click on this. I'll show you this. See this. Again, go to Adda 24/7 over here. See this live JAIIB and CAIIB. Click on this English batch. On this English batch, you see this now. See this English batch, ABM plus BFM plus retail. Okay, 17999 batch. See this. Click over here. Click on this batch. Once you see, click over here. See this 17999. Click on offers. Put the code Y432. Click over here. See the offer. See 17999 reduced to 3599. See here, it won't remain for long. Okay, because it's 80% off. It won't remain long. So grab this opportunity as fast as possible. Okay, because it's an investment for lifetime. Okay, I'll come up tomorrow with another topic. So bye till then. Best of luck.